Welcome to episode 2 of Taxes with Certified Taxes. My name is Kevin. I'm the owner of Certified Taxes. If you want to get in contact with me, social media, Instagram, Certified Taxes, or CertifiedTaxesLLC.com. You can reach out to me if you have any questions, set up an appointment. If you just want to kind of reach out, go to either of those. I'll be happy to reach back out to you. In episode 2, we're going to speak about how to maximize your refund or lower your taxable income. So there's 2 ways you could do that, is by credits or deductions. But what is a refund? So a refund was when you have your taxes withheld exceed the amount of taxes that you owe, or it could be like an overpayment. So there's a couple ways to do that. Like I said, by credits or deductions. So a deduction is when you reduce your taxable income, which will reduce your taxable liability, and essentially will reduce the taxes that you owe. Or a credit directly reduces the taxes that you owe. So let's say, let's go through like a diagram. Adrian, can you put this somewhere up here?
It's up.
There it is. It's up. So let's say your salary is $100,000. You have 10,000 deductions. So your salary, $100,000, 10,000 worth of deductions. So your taxable income is at $90,000. So let's say your tax rate is 25%. You would owe $22,500 worth taxes. So let's flip it around and say 10,000 worth of credits. So $100,000 salary, no deductions. So your taxable income is still at $100,000. So it's the same thing. Your tax rate is about 25%. So you owe $25,000 taxes. But now you have a tax credit for the $10,000. So you subtract $10,000 from that 25. So now you would owe $15,000 worth of credit. So it kind of gives you kind of an idea of how both of them work. Both, could be in your favor. Just kind of work a little differently. If you had to choose, I guess credit would be a little bit better, I guess you could say. But both, you want to maximize all your deductions and take advantage of all your credits, whatever you qualify for, to reduce, amount of taxes that you owe. So I would say about 95% of the time I do give my clients a refund, or I reduce the amount of taxes that they owe from the previous year. I like to say I'm the new age, tax account, because I don't like when people just give me their information, their tax documents. I file it and then I give them a tax bill. That doesn't bring me kind of excitement. That's not fun for me. I don't like to work that way. I like to know my clients, build a relationship with them, so I can know what's happening in their life, throughout the year, so we could kind of take advantage of that. So let's say you want to buy a house, or you're going to get married, your wife's pregnant, or you're going to increase your salary. If I know that throughout the year, we can really strategize and plan for that. Instead of the end of the year, you tell me, all this stuff happened. We really can't take advantage of that throughout the year. Just kind of reduce your taxes, amount of taxes that you owe. We could do that by, like I said, adjusting your paycheck that you get. From your paycheck, you adjust your W-4, or take advantage and kind of plan. Like, okay, now we could use this credit deductions. So by the end of the year, we'll be fine with that. So that's why I like to get to know my clients and kind of build a relationship, and it brings excited to me. Like brings me joy. That's why I do what I do to help my clients, and we kind of grow together and kind of, build a relationship. So that's kind of what I like to express to my new clients, let them know they have questions for me. I'm here to educate and not just do the work for you. I like to educate you. Again, it'll work both in our favors. So let's get into some deductions. The first one that I always recommend to all my clients, the first one is to a 401k, to enroll in 401k, especially if your employer doesn't match. So let's say you contribute 3% of your paycheck. Your employer will match that same 3%. So it's pretty much free money that they're contributing to you. And all the whatever you contribute, it reduces your taxes. So it reduces your taxable income, which reduces your taxes. So if the amount you could contribute if you're under 50 is $22,500. If you're over 50, the max you contribute is $30,000. So, it's a good way to invest in your future. If you're self-employed, you can also set this up. It's a little bit different, so we'll speak about that more in episode 3. We'll touch more on about self-employment expenses or deductions. Also, a Roth 401k is also good for investment, but you don't get to, whatever you contribute doesn't reduce your taxable income. So this is, the traditional 401k is pre-tax dollars, and Roth is post-tax dollars. So it doesn't reduce your taxable income, but what it does do, once you qualify to withdraw it, it's tax-free. So there's benefits from both. It kind of depends on your situation. Again, that's why it's good to kind of communicate your tax accountant to kind of say, okay, well, I'm looking at ways to reduce my taxes, or I want to maximize my 401k and take it out tax free. So once I qualify, so it's good. Like I said, it's always good to communicate and figure out what is your plan, instead of waiting until it's too late and then you kind of really can't do anything. So that would be the first one I really recommend to take advantage of. The second one would be which is an HSA, health savings account, or a FSA, flexible savings account. Both pretty much work the same way. They are a savings account for any kind of medical expenses. So it could be for doctor visits, medicine, prescription. It could be for glasses, contacts. So if you're going to pay for the expenses anyways, might as well take a deduction, which will reduce your taxable income. So I would really highly recommend to enroll in that. Another one would be the next kind of savings account would be the dependent care savings account. So if you have children that are in daycare, you contribute to this savings account. It pays for the expenses for daycare. So again, it reduces your taxable income, which reduces your tax liability. Next, kind of similar tax credit would be the child and dependent care tax credit. So on this one is an actual credit. So whatever expenses you pay out of pocket, you get to you could say like a refund or a credit for all the expenses. So the maximum for one children would be $4,000. Two or more would be $8,000. So let's say you did contribute to the dependent care savings account. But those expenses didn't cover the full amount of the daycare. So let's say you had to pay some out of pocket. So this is where you could also use child dependent care tax credit that you paid for. So essentially, it could be like a refund to you to kind of cover the leftover expenses that the savings account didn't cover for you. Next kind of credit, we'll go into a child tax credit. So if you have a dependent under 18 or under 24, a full-time student, you get a credit of $2,000. Any kind of dependent over 18, it's a $500 with the credit. So we'll go one more. We'll go back to the child dependent care tax credit. So the way you could qualify for this is that both parents need to be working or actively looking for employment, or a full-time student. So kind of keep that in mind when you're trying to use this account or use this credit. If you're a student, we'll go into another deduction. So if you're a student, you have student loans, you could deduct up to $2,500 worth of interest you paid on those student loans. Again, it kind of helps you kind of reduce your taxable income. Another school credit we'll go into next would be the American Opportunity Tax Credit. So if you're, you can use this for 4 years of higher education. So say you're in college, you can use up to 4 years. It's a $2,500 tax credit. So whatever qualified expenses you have for school, you can use this credit, and $1,000 is refundable. So let's say you didn't use a full $2,500 or $2,500 tax credit, $1,000 is refundable to you. Another school credit would be the lifetime learning credit. Pretty similar to the opportunity credit. This one is it's unlimited. You could use it for as many years you're in college. So obviously you use this after the 4 years. It's a little different. This one is a credit up to $2,000, but it's not refundable. So let's say you didn't use the whole $2,000. It's not refundable. It just reduces your taxable income. So another deduction would be the charitable contributions. You're able to deduct 60% of your AGI, but this has to be itemized. So there's two ways to go about this. You can either itemize or use standard deduction. Majority of the time, people just use standard deduction, but there are times where using itemized deductions kind of will benefit you. So let's say you had a lot of charitable contributions. Again, this will kind of benefit you more. So another way to use itemized deduction is the home mortgage deduction. So let's say you had a lot of home interest that you paid on your home, so your mortgage. So let's say you had a lot of charitable contributions and your home mortgage interest was also high. You would want to itemize. Take advantage of itemized deductions and use both. So both you can't itemize on your federal return and use standard deduction on your state. So you either, again, you want to talk to your tax accountant, your taxpayer, see which route would be best for you. Now we're going to talk a little bit more on self-employment. We'll go more into details in episode 3, but I want to touch a little bit and kind of introduce kind of ways to reduce your taxes. So a lot of people that are W-2 employees want to know what else can I do to reduce my taxes? A way that I recommend is start an LLC. A side hustle doesn't have to be anything kind of big. It could be kind of on the weekends, something that's going to help take advantage of self-employment. So example, if you want to use a home office deduction, and if you're employed W-2 employee, you can't use that. So you would have to be self-employed. So that's why I recommend start a side hustle. Now you become self-employed. You could take advantage of that home office deduction. What that does is you could deduct a portion of your home expenses. So your internet, cable, electricity, your mortgage, your rent. You could deduct a portion of that on your taxes. So you have to be self-employed. You can't be just a W-2 employee. So that's where becoming an LLC or sole prop, you could take advantage of that. Next kind of self-employment tax strategy I want to speak about is hiring your children. So again, we'll talk about this, how to set this up in episode 3, but I want to introduce it. So you can hire your children under the age of 18, pay them up to $13,850, which becomes deduction for you, and it's tax-free to them. So again, in episode 3, we'll talk about actually how to do that. So children under 18, they're not subject to payroll taxes. That's why they don't pay taxes. But again, we'll speak about that in the next video. So I highly recommend if you're a W-2 employee, start some kind of side hustle. You deduct like your cell phone, you get an Apple Watch, all that becomes deduction. Yeah, it's your personal use, but it's also for now it's for your business, so you're able to deduct that. So I highly recommend starting some kind of side hustle. That's good, so you take advantage of all those personal expenses. And if you have loss, offset your W-2 income. So those are the kind of tax credits and deductions that are going to help you reduce your taxes and maximize your refund. So that's the end of episode 2. Episode 3, we'll get into more self-employment taxes and how to reduce your taxes if you're self-employed. Get more into details with that. Again, if you want to see my content, go to Certified Taxes on Instagram or CertifiedTaxesLLC.com. You can reach out to me, set up an appointment. If you have any questions, I'll be happy to help. All right, see you in the next episode.
Been at it already, had my tarot read. Things are looking up for me, that's what my tarot said. Been pumping out pheromones and wearing red. Young Jerry Lolliver King, but they're not aware of it. $40 to show money, that's what they stole from me. Blow it all bowling, guess I roll funny. Go find me a snow bunny, ask if this cold world's making her nose runny. She melted, I wear a cape that is velvet. Couldn't see it, she felt it. See it all like I'm Elvis, move my hips like I'm Elvis. I don't pitch it, I sell it. Couldn't picture me jealous, turning fans into zealots. Tuning in when I tell it.